Hi, good morning everybody. So I welcome you all of my students to this class of fundamentals. We will discuss the basic concepts of partnership fundamentals uh, and this is for your revision, you can say, for your understanding of the concept. So let's start with it. First and foremost, under partnership, we all know that, all of us who are in class 12 now, that we know that in our grade 11 we had earlier done trading account. In the final accounts we've done trading account and then P&L account, which is profit and loss account. And after preparing profit and loss account, we used to make the balance sheet. Right. So, we all know that under trading account, what we used to do is that we will record all the direct expenses of a firm, of a manufacturing firm, and record those expenses on the debit side of the trading account. And we will record our sales. The sales of the firm will be recorded on the credit side. Whatever is the difference will be known as the gross profit. Now this gross profit will get transferred to the credit side of the P&L account, and on the debit side of the profit and loss account, all the indirect expenses will be recorded. Whatever will be left from after subtracting all the indirect expenses from the gross profit, whatever will be left is the net profit. And in a sole proprietorship, that net profit is to get directly added to the capital of the individual proprietor. But in fundamentals, when we are talking about grade 12 partnership fundamentals, we after preparing the profit and loss account, we have to make another account which is known as the profit and loss appropriation account. Now that profit and loss appropriation account, how we make it, what are the components of profit and loss appropriation account, we will discuss this in today's class. So, just as we make profit and loss account, on similar lines we make profit and loss appropriation account. Under profit and loss appropriation account, what are the components which will be shown, items which will be shown on the debit side, and what all items will be shown on the credit side? We will discuss in today's class. See, on the debit side, see, first of all the direct expenses have already been taken care of in the trading account. Even in case of partnership firm, the we make trading account first, then profit and loss account, and then after profit and loss account we make profit and loss appropriation account. Now in trading account we have already recorded the direct expenses. In the profit and loss account we have already recorded the indirect expenses. Now the question is, then, if all these expenses have already been recorded in the previous accounts, what are we going to show in the P&L appropriation account? In the profit and loss appropriation account, we will record, basically we will show the distribution of profits. So the net profit is what is coming in the profit and loss account. That net profit is the first thing which we can transfer here by writing by P&L account. So this net profit which is there in the profit and loss account gets transferred to the credit side of the profit and loss appropriation account. Right. Now, once we have shown the net profit on the credit side of profit and loss appropriation account, now we will show how this net profit of the partnership firm, this is the profit of the partnership firm, of course. Now this net profit, how this net profit is shared, how it is distributed amongst the partners of the firm. In order to show that, on the debit side, what are the components, in what all forms is this profit shared? So the first component which we can talk about is interest on capital. So one component is this. What does interest on capital mean? Interest on capital is basically when a partner has invested money into the partnership firm in the form of a capital, then that partner is eligible to get interest, yearly interest on his capital. So what it means is that a partner is investing money into the firm, right? In the partnership firm, a partner is putting money in the partnership firm. Now, the firm will pay interest to the partner. If the partner is putting the money in the firm will pay interest to the partner. So this interest on capital is a sort of an expense to the partnership firm. And as a result, that interest on capital has to be shown as an expense on the debit side of the P&L appropriation account. So this is what we will show. So here if let's say there are two partners in the partnership firm, so we will we'll say A's capital and B's capital. Whatever is the interest on capital, we will show it here. Apart from interest on capital, the next component is to salary. Now there is a possibility that after at the time of formation of the partnership, at the time of signing of the partnership agreement, which is also known as the partnership deed, one of the partners negotiated with the other partner. Let's say here we are talking about A and B. So B and A were sitting on a negotiating table and they were discussing the terms and agreements of the partnership agreement. So B said that he will be working full time, devoting full time into the partnership firm. So as a result of this, he should be getting a salary every month. So as a result, to which B, of course, B would have agreed, or as a result of that, they put some amount that B will get every month in the form of salary. So now that salary is again to be paid by the firm and out of the net profits. So as a result, we'll show here to salary B's capital and we'll put that amount here. Apart from salary, the other component which is there in the profit and loss appropriation account is commission. Now, commission is another aspect commission is something which is usually earned on, some sort of, like deals which materialize with the help of some, agent or someone who is capable of striking deals, business transactions between the partnership firm and the client. Now there is a possibility, it is a usual, business tendency where the partnership firm may have a partner who's got a very large network of, potential clients. Now this partner is roped in, has been brought into the firm only for this purpose so that he could increase the sales of the partnership firm. So he says that, see, I've got such a huge network with me and I know these are all potential clients for the firm. So as I would request that whatever clients I'm able to bring and through me, whatever is how the sales gets increased, for that I need to earn commission. So his commission is usually on as is in the form of a percentage on the total sales of the firm. So there could be some partner who would be driving sales of the firm because he has got a large network and he's got a very good foothold in the market. So he will get some percentage of that sales, in the form of commission. So that happens in the agreement of the partners, two partners. So that commission, let's say if there was, A was the one who was getting clients to the partnership firm. So let's say 5% or 2% of, if the sales is 10 lakhs, so 2% of 10 lakhs will be shown here, right? So that is the commission. Now, after doing this, we have another component which is shown on the credit side of the P&L appropriation account, and it is known as interest on drawings. So interest on drawings see, interest on capital is what? We've already discussed this concept. Interest on capital is the interest earned by the partner on the capital invested by the partner into the firm, right? Whereas interest on drawings is what? Interest on drawings is exactly the opposite of interest on capital. So in case of interest on drawings, the partner is withdrawing money out of the firm to meet his expenses. Drawings is when a partner or a owner withdraws money from the firm or the company to meet his or her personal expenses. So those drawings, when if a partner is withdrawing the money, that money belongs to whom? The money which is being withdrawn by the partner, that money belongs to the firm. So then they are liable to pay. Partners who are withdrawing money from the firm, they are liable to pay interest on the money withdrawn. So that is known as drawings. So when money withdrawn is drawings, and interest payable on the drawings is interest on drawings. So this interest on drawings is being paid by the partner to the firm. So it is an income to the firm. So that is why we will show it on the credit side of the P&L appropriation account. Okay, so here we will show the net profit of the firm. Here we will show the interest on drawings, which is to be paid by the partners to the firm. On the debit side, we will show interest on capital, which is supposed to be paid by the firm to the partner, and then salary, which is to be paid to the partner, commission, which is, of course, all these components are dependent on the terms of the partnership agreement, right? Then apart from this, there could be another component which we can show here. It is to general reserve. So what it is that sometimes, so we know that, we understand that profit is there which a firm will earn. From the profits we are giving all these things. Now sometimes the partners may decide that certain percentage of the net profit is to be left is to be kept for the purpose of unforeseen circumstances. So what in nutshell it means is that we need to create a reserve which can be later utilized for any eventuality or unforeseen challenges in the market. So that is known as journal reserve. So the firm has created a journal reserve. If the profits were 10 lakhs, so some percentage of that, let's say if the journal reserve is to be 10% of 10 lakhs, so we will show 1 lakh over here as journal reserve, right? So this is the thing. Now what we do is we add up these two values on the credit side, which is P&L account, the value in front of P&L account and the value in front of interest on drawings, and we subtract interest on capital, salary, commission and general reserve. Now whatever profit is left, that is transferred to the partner's capital account. It will be shown as two profits transferred to A's capital and B's capital. So those profits are shown here after adding these two items which are there on the credit side and subtracting interest on capital, salary, commission and general reserve. Whatever are the remaining profits, those profits are transferred to the partners. So in nutshell, this is the whole thing about profit and loss appropriation account. See, it's a very basic thing we must keep in mind is that we are talking about appropriation. This is profit and loss appropriation. We are talking about appropriation of profits. So which naturally means that how appropriation is what? How the profits will be shared or distributed amongst the partners. The firm is doing its business, normal business. The firm is recording all the transactions in the trading account. The firm is recording all the indirect expenses in the profit and loss account. And then the firm is getting the net profits. Now those net profits which a firm gets, how the firm uses these net profits, shares, जैसे अगर हम हिंदी में बोलें कि भैया अच्छा ये सब बच गया, आज का पूरे दिन का कमाई इतना था, इसमें से हमारा इतना, आज हमने इतना पैसा बनाया है, अच्छा ये लो, ये तुम्हारा इतना बनता है, तुम्हारा इतना बनता है. दैट इज जो ओनर्स होते हैं, पार्टनर्स आपस में जब शेयर करते हैं, दैट इज व्हाट इज प्रॉफिट एंड लॉस एप्रोप्रिएशन अकाउंट ऑल अबाउट. That's all for today. We will discuss more about the chapter and more concepts in detail in the next class. Thank you.